hopefully hopefully we'll keep above the 40-day moving average. But if it moves below the 40-day moving average, then I think we're going to see a return. The market is going to test the lows, and we're going to move lower than that. But we're not there yet. So I kind of wanted to put out stocks that were near a buy point, and I think might offer some value in this very, very weird market that we're in. One of the first stock that I would really like to highlight here is a stock that I've been kind of interested in for at least 2 weeks, and I think that we're going to see some very good movement in the stock, and that's Franklin Nevada. It's stock. The symbol is FNV, and I think that one that might show some very, very promising, very, very promising numbers, because it has almost no debt. I just want to show you the next slide for that. It's really important to see that in an environment like we're in, a sort of a deflationary environment, you want to be very careful about the stocks that we are long, unless they just have hypergrowth and they're in absolutely the very best category. I put Netflix in this category and possibly Facebook. We got to be very, very careful about going long with stocks that have any debt load at all, because we are probably facing, at least in the next 2 quarters, we're facing falling sales. And when you have falling sales, unfortunately, with falling sales, it means falling revenues, and falling revenues make stocks that have large debt loads unable to service the debt. And so we're looking possibly to watch list stocks that have heavy debt loads, because they're very likely to move lower. But the stocks that have very light debt loads or no debt loads and have a rising demand, for such as Franklin Nevada and another one called KL, those are going to be very good for long. So Franklin Nevada is very near a buy point right now. Its range today is from 141.79 up to 147.28, which is absolutely just about a quarter off of its all-time high. The earnings per share increased last quarter very, very nicely. They just reported. Their next report date is on August 7th. They're doing extremely well. Their debt load is only 2% on this stock, 2%. So basically, any increases in sales are going to go directly to the bottom line. I suspect this one's going to go higher. The annual pre-tax margin is 47.8%. So basically, any increase in sales, you're going to get quite a bit of revenue increase. They're in the mining area. They're in the gold miner. I think this is one of the top industry groups at the moment, and it typically, when there's uncertainty in the market, that's when people are interested in buying gold, and this is one of the better gold miners. Now, the way Franklin Nevada works is that it buys interests in junior interests in very producing mines. They do not take the lead, but they invest in the very best of the best. So this is one you want to definitely put on your watch list. Franklin Nevada, FNV, and it's very low debt, and it's got a very high margin, and it's got increasing sales. So that's the kind of thing you want to look for. The next one that I want to add to a potential watch list for longs, this is owning them long and not shorting them, is Kirkland Lake Gold. Symbol is KL. Now, this is a quite less expensive stock. It's a better stock to get if you're looking, possibly to build a position. I think that there's going to be very strong. The composite rating on this stock is 99. It doesn't get any better than that, folks. It is the best composite rating that you can have. Now, the volume, there's one concern about this stock. Typically, I like stocks that are very liquid and relatively larger cap. This does have a 1.5 million share volume per day, which is very good. You don't want to buy any stocks typically below about a million shares changing hands a day. And the reason that you don't is because if you get into a situation where the liquidity dries up, you may not be able to sell the stock. So that's one of the reasons why I tend to be very careful about not only the stocks in terms of their debt loads, but also how liquid they are. And definitely KL, KL wins in this category. KL is based in Canada, and they have most of their mining operations in Australia, which has become the premier area in the world to mine gold. And the interesting thing about this company has no debt, zero debt. So if the price of gold goes up and their sales go up, guess what? It all goes to the bottom line. So this is in normal times and inflationary times, believe it or not, these stocks don't do well. But in deflationary times, when debt is king and people are buying gold, believe it or not, these companies do very, very well. It's got $11 billion cap, which is sizable in the gold mining space. Again, the industry rank is very good. It's in an excellent sector right now. Number 4 out of all the 197 sectors. So really, really good. The earnings are due in July 31st. I think that by July, when some of these bad numbers come in from a lot of the industrial stocks, I think that these stocks, like Kirkland Lake Gold, like Franklin Nevada, are really going to shine because there's not going to be a whole lot of places to go. And I think the choice is going to be invest in cash or invest in one of these stocks. So I definitely think it's going to be it's going to be a good play going forward. And I just wanted to say that. Now, in the current market, I think that we want to be looking very carefully at what stocks are setting up for buys. My favorite stock, and I'm actually in this stock, so I'm eating my own dog food on this one, is Facebook. And as you can see, the composite rating, again, 98. 99 is better, but that's about it. Everybody's heard of Facebook. Even though the revenues for advertising are just going way down because everybody is not advertising in this market. They just can't figure it out. The advertising they're doing is on social media, and Facebook is taking the lion's share of this. So there actually is a buy point at 215.38. It retreated significantly here. It doesn't quite come to this buy point. It's right now trading at about 203.71 when this slide was made this morning. It has a cup base, which it's not bad. It's not as good as cup with handle, but it's still very good. This is one that if you are not in you're not in a stock, this is the one you want to consider. The way I buy this typically, is I'll buy it when it moves lower. I'll then sell a covered call on it, and then hopefully it will move to the upside. So I think Facebook definitely one you want to be long. Now we have come to the part of the show where I think that we want to start looking at possibly shorting. Do you think Norwegian? Okay, this is a question um, from from TikTok. Uh, uh, let's see, is it Norwegian? GLD. Okay, what about GLD? Well, GLD is not a bad one. That is the GLD is the ETF, the gold ETF. I think you're better with individual plays because the problem with the gold space, it's kind of like oil, and mining is a kind of a weird business. There's some goods and there's some bads. I would try to go with the individual stocks. There is another one, Barrick, which is quite good. GOLD. That's another one I would definitely recommend. But right now, the top in that category is Franklin Nevada, FNV, and then second is KL. So that's kind of where that's at. What is a composite rating? Well, that's great. That's a great question. A composite rating, basically, the Investor Business Daily takes all of the factors that go into a stock, kind of what the chart pattern is looking at, what the debt load is, what their sales growth are, and they put it all together, and they put it together in a rating, and they rank stocks really from 99 down to 1. And so sometimes it's not enough just to buy a good stock. You want to buy a good stock in a great sector. There are 197 sectors, and the closer to the top of the heap they are, the better they're going to be. That's why looking at technology stocks has been very good, because they typically are some of the higher ranking groups, and they tend to produce higher composite ratings. Now I'm going to show you a stock that has a relatively low composite rating. This is Emerson Electric. I don't know if you've heard of this company. It's a very old line company based in St. Louis. Has been for many years a very, very good stock. Now, this is an interesting chart. I don't know if you can see this. Hopefully, I'm back up in line on Periscope and YouTube, and you can actually hear this. But here's the way that looks. The stock has moved above the 40-day moving average, but it has come down, and it's tested it, and it's moved up. So it is moving up today. It's up 1.89%, 98 cents at 52.88, but it only has a composite rating of 42. That is not really if you're buying this long, this would not be where you want to be. But if you're buying it short, you might be very interested in this, because what do I mean by short? Well, what you can do, you can make money in two ways in the stock market. You can buy a stock and have it go up. That's called being long in the stock. And you can also borrow the stock from your broker sell it and then wait for it to go down and buy it back. And that's called being short. And what I'm trying to produce is a list of stocks that will be good in the situation we're going to face ourselves with in the next quarters or so. In the next quarter, because of the coronavirus and because of the situation that we have in the market in general, we're going to see sales contract from a lot of different sectors. Hospitality being at the top of the list, also industrials. And these companies that have high debt loads will be in a very bad situation. They're going to have to lay off people. Why? Because their revenues are not going to be able to cover their debt service, and they're going to always prefer their debt service before their employees. This is always happens. I know it's terrible, but it's true. So they will pretend like they're going to come back full steam, and then in the middle of the night they will lay off people, and that's unfortunate, but it's going to happen. And therefore, these stocks typically we're going to lose. Typically, will lose value over the next period of time. I'm building a watch list of stocks that are precisely in this category and are potentially good candidates to short. And Emerson Electric, symbol EMR, is at the top of the list. It has a debt load of about 52%, which under normal circumstances wouldn't be very bad. But if their growth rate is going to be low, and it is, you see the estimated change in their growth rate on the current year, they are estimating, and this is just an estimate, that their sales are going to shrink by at least 18%. They're probably going to be more than that. And so therefore, I don't believe that their stock price will be at the level that it's at now. So that's why it's a good candidate to short. I don't think they're going to go out of business, but they're not in a good situation, and their equity will be reduced. And when the equity is reduced, that is a good sign for people that are shorting the stock. The industry group rank on this is 126, and there's out of 197. So it's at the bottom of the rank. It also has a very high beta, which means that it tends to move in sympathy more so with the general market. And so if the market goes down, it's going to go down, but it's not going to go down with the market. It's actually going to exceed the retracement by 20%. So if the market goes down 1 point, an Emerson Electric is estimated to go down 1.2. So as you can see, this is a potential short. The next one on the list for shorting is Marriott International. Now everybody has seen Marriott. I mean, I've stayed in Marriott's. They're wonderful hotels, extremely well run. Just good on basically everything. But the problem, of course, is nobody is traveling, and the conventions have been canceled because of the coronavirus thing. So every way that a company like Marriott can make money is challenged. So the future, at least in the short term, doesn't look very good for them. And even though there, as you can see on this 40-day moving average, it's moving up today. It's moving up to meet this line, but I do believe that eventually it's gonna go through. Usually, the way this works is that there's 3 attempts at holding the line, and this the first attempt. They're going for the second attempt, and by the third attempt, I believe it'll be very, very weak. This stock more than likely will be lower by June, and it makes a good short candidate. So I just wanted to show you that. Also, I want to show you the debt level on Marriott. Marriott's debt level is extremely high. The debt level on Marriott is 14.1417%. That means that it is heavily indebted. So if their sales go down, uh, then it's very likely that they won't be able to meet their debt obligations. on that. So that's sort of how I see it. Um, okay. Well, let's see. Is it a good time for long term? What do you think about QSR? I don't know about QSR. GIL. Okay. I'm sorry about the audio. I'm having a lot of issues regarding the bandwidth here. So I am going to probably sign off for the day. And I thank you for everyone taking a look here. I am in the process of getting new upgraded equipment. So hopefully that will enable me to get a better to get a better feed from some of these platforms. So again, I apologize for that with the audio. I seem to be not doing as well on the audio. Oh, there we go. Okay. Microsoft reentry. On the Microsoft reentry, I would wait until Microsoft is at 165, and then I think you want to go all in at that point. So that's my that's my. I'm just going to put it up there because I'm having trouble with the audio, but I'm going to put MSFT reentry at 165. So that's where I'm going to. Oops, there we go. I'm not even able to show that. Wow. Okay, there we go. So that's where I see that going in about 175. And thanks for everyone for tuning in. If you want to get get any of my alerts, please go to www. Dallas Trading Floor and just put it in the comment section and enter your name and number, and we will get to you. Thank you so much. Also, so I'm going to sign off now for TikTok, but I'm going to be on Periscope and on YouTube just for a second more. So if you want to see some of the charts, go on over to pscp.tv/Dallas Trading Floor. I'll see you tomorrow. Thanks, everyone. I'm so sorry for the audio. Apologize for that. I've got, okay. I'm just going to answer Hitachi. I think that's a good trade. That WFC puts are a good trade. And the reason I think the reason I think the WFC puts are a good trade is because I don't see any strength in the financials at all. I just don't see them doing well, and so I think a June 19th WFC put is very good. Oh, the audio is fixed now. I apologize for that. Wow. Okay. Well, back on. Can you? Oh, let's see. I'm going to put this up here. Let me show this. Okay. Hopefully it'll come up here in a second. I'm good. I apologize for this. I'm in the process of getting new equipment. What about a put spread on March or a simple October put? I think that's a great strategy. I also would like to show what a short strategy would be, and that basically, and it's really quite simple. It's much easier. The reason I kind of like sometimes actually individually short the stocks is because that way I don't necessarily have to roll my options out in case I run out of time, and that's one of the main reasons I go with that. But a put spread can be very good. The what I don't like about doing a put spread as opposed to a call spread. I like call spreads a lot because first of all they're more liquid, but second of all, if a bear call spread, if it's done correctly, will give you cash to go into the position, and that's what I like. Uh, I don't like to be in a net debit situation. I like to be in a in a positive situation um, when I'm on there. So I do appreciate that. Oh, thank you. And by the way, thank you for subscribing. I just got a note on that. So everybody, thank you for bearing with me with my bad audio. I've got to figure out a way to get this to be work better. Um, but I probably going to try something else with a different headset set up tomorrow with headphones, and we'll be seeing you tomorrow. So